Chapter 11, Sample Problems. This chapter is working with the current liabilities that companies have to record and account for. One of the main current liabilities that all companies have to deal with are liabilities as a result of payroll. So let's take a look at the first problem. In January, gross earnings in Alexi company were $60,000. Essentially what they're saying is that all the employees during January earned and grossed $60,000 in pay. Alexi company has to pay that amount to the employees. All earnings are subject to 8% FICA taxes. Federal income tax withheld was $14,000. State income tax withheld was $1,600. Our first step is to calculate net pay for January and record the payroll on Alexi's general ledger or into general ledger. So remember, net pay is the difference between the gross amount of earnings or the earnings that employees earned based on their salaries and hourly wages. So the gross pay was $60,000, okay, given in the problem. Of that earned pay, 8% is being withheld for FICA taxes. So 8% of the $60,000 will be withheld for FICA. Federal income tax withheld was $14,000. State income tax withheld was $1,600. So the employees earned $60,000. That's the total expense that the company incurred. But the actual cash being paid to the employees is only $39,600 because they withheld FICA, federal income tax, and state income tax. The amount of expense to record is the full gross pay. So we will debit the expense account for $60,000. The amount that will be paid to employees, here we are going to pay it. We haven't paid it yet. Or if we were actually paying it, this credit would be to cash. But because we haven't paid it yet, we're recording the liability. We will credit the liability to increase it. So the net pay is how much will actually be paid to employees, $39,600. All of the amounts that are withheld from the employee's pay become liabilities. The company has withheld those amounts. They have to then pay those amounts to the federal government for FICA, to the federal government for the federal income taxes withheld, and to the state for the state income taxes held. So those amounts withheld, which is 8% times 60,000 or 4,800, 14,000, and 1,600 are also all recorded as liabilities. Okay, these are all current liabilities because they have to be paid within the next year. Okay. All right, look at this example that is one particular employee, Cindy. Her regularly hour wage rate is $16. She receives an hourly rate of $24 for work in excess of 40 hours. During one January pay period, Cindy worked 47 hours. Any hours worked over 40 is considered overtime. Cindy's federal income tax withholding is $95. She has no voluntary deductions. We will compute her gross earnings and her net pay. Gross earnings are the amount of earnings before any withholdings, and net pay is the amount of pay after withholdings, and that's the amount that will actually go into the employee's bank account. Gross earnings are going to be 40 hours at the regular rate. So 40 hours times 16, regular pay is $640. She had an additional 7 hours over the 40 hours, will be paid at time and a half. Her regular rate is $24. At time and a half, we will multiply that times, her regular pay is 16, get this straight, and multiply that times 1.5, we get her overtime rate of $24. So her overtime hours is 7, will be paid at a rate of 24. She will get overtime pay of 168, total gross pay of 808. Her federal income tax withholding is 95, no voluntary deductions, and federal income tax, didn't tell us up here, they told us down here, is being withheld at 8%. Oh, that's the FICA tax, sorry. Okay, so her gross earnings, her total amount earned was 808. She has 8% of FICA taxes being withheld, so 8% of her gross pay, or 6464 will be withheld for FICA. And her federal income tax, we were told, is 95. So if we take her total pay less the withholdings for FICA and federal income taxes, her net pay, the amount that will actually be paid to her, is $648.36. All right, we're going to work with the same employee in this problem. We're going to prepare the journal entries to record her pay for the period and the actual payment of her wages. Okay, now recall that her total gross earnings were 808. That is the total expense to the company. We will debit the wages expense for 808. Then we have to record the liability for her net pay. The actual amount that will be paid to her is $648.36. So we credit the wages payable. We also have to record liabilities to the federal government for the amount withheld from her pay for FICA and for her federal income taxes. Then when that is actually paid out to her, essentially all we will need to record on the company's general ledger or in the general journal with eventual posting to the general ledger will be payment of that liability. We will debit wages payable and credit cash. All right, for this next problem, I'm going to do a split screen here to make it easier to follow. Here we have 4 employees that are paid an hourly basis plus time and a half for all hours worked in excess of 40 hours each week. This is the payroll data for the week that ended March 15th. For employees, number of hours worked, what their hourly rate is, gave us the amount of federal income tax withholdings. And it looks like all employees are giving a charitable contribution out of their pay to the United Fund. Following tax rates are applicable. For FICA, there's an 8% tax rate. State income taxes are 3%. State unemployment taxes are 5.4%, and federal unemployment is 0.8%. These first 3 employees are sales clerks, so all of their pay is recorded as store wages expense. The 4th employee performs admin duties, so her pay is recorded as office wages expense. The first thing we need to do is prepare a payroll register for the weekly payroll. We will use, actually we don't even need to use this wage bracket withholding table because number 1, it's not necessarily an important part of our course, and they already told us how much to withhold for federal income tax, so we can ignore that instruction. Okay, let's prepare a payroll register. Essentially what a payroll register does is it by employee and then totals the gross earnings, which are their regular earnings, and the overtime earnings to get their gross pay. And then it lists out all of the deductions from gross pay to get to net pay, and then breaks it out by how that net pay is going to be recorded, what type of expense it will be. Okay. All right, so looking here, we have these 4 employees to get their hourly or their regular earnings. We are only going to use the first 40 hours. So 40 hours, all employees worked 40 hours, so they all got their full regular pay at a rate of $15 for these first 2 employees. 40 hours times 15 gives us 600. In addition to that, Mary worked an additional 2 hours over the 40 hours, so she will get time and a half for her overtime. Multiplying that out, her regular rate is 15 times 1.5. She will be paid $22.50 for her overtime hours. She worked 2 overtime hours. $45 will be her overtime pay. For these 2 employees that had an hourly rate of $13 per hour, they both had a full 40 hours of regular pay. 40 hours times 13 means their regular pay is $520. And then their hourly rate for overtime will be the $13 regular rate times 1.5, they will have, oh goodness, hold on, regular rate of 13 times 1.5. They will have, something's still not right, hold on, okay, time out, 13 times 1.5. So their overtime rate will be $19.50. Andy worked 4 hours at $19.50, so we will multiply the $19.50 times 4 hours to get Andy's overtime pay. And then for Kim, she worked 6 hours of overtime pay at $19.50. She will be paid, oops, I had the wrong amount, 13 times 1.5, overtime rate of $19.50 times 6 hours, $117. So now that we have their total earnings for regular and overtime, their total gross pay of $24.80, then we need to multiply their gross pay by 8% to get their Federal Insurance Contributions Act, Social Security and Medicare withholdings of 48, which is 600 times 8%, 645 times 8%, 598 times 8%, and 637 times 8%. Then for their federal income tax withholdings, we were just given those amounts. So those amounts are just transferred over here. State income taxes are 3%. So 3% times their gross pay will give us their state withholdings. And for United Fund, 3 of the 4 employees are having $5 withheld. Andy is having $8 withheld as a charitable contribution. Total withholdings from their paycheck will be the FICA, federal income tax, state income tax, and charitable contributions. If we take their gross pay, subtract out all of their withholdings, we will end up with net pay. That net pay, 3 of the employees were, what did they call them? Store wages. And the 4th is office wages. So when we record this journal entry, 3 of the 4 will have their total gross wages recorded as store wages expense, and 1 employee will have their wages recorded as office wages expense. So let's prepare the journal entry to record the payroll on March 15th. We also need to record a journal entry for the employer's share of payroll taxes. All right, so looking at our payroll, we have some messed up. There we go, that looks a little better. All right, so the store wages expense will be the gross pay of the store wages employees. Record that as store wages expense. 637 will be recorded as office wages expense. The actual amount paid to employees will be their net pay of $1944.20, so that's the amount of the wages liability. All of these other withholdings for FICA, for federal income tax, for state, and for the charitable contributions to the United Fund, all of those are recorded as liabilities. Okay. We also need to record the employer's share of payroll taxes. Okay, so like we learned about in the readings and in the mini lecture videos, not only do employees pay taxes related to their payroll, but employers also pay specific taxes on any payroll that employees earn. One of the first things they do is they match any FICA taxes that employees pay. So whatever employees pay related to Social Security and Medicare, the employer pays the exact same amount in addition to the amount that the employee pays. So we have to record a liability for the employer's share of FICA taxes. And in addition to that, employers pay unemployment taxes. We as employees do not pay it, only the employers. So the employers have to pay 5.4% for the state and 0.8% for federal. So if we take the gross wages, $2,480, and multiply it by 6.8% for federal unemployment taxes and 5.4% for state unemployment taxes. The employer has 3 liabilities to pay taxes for FICA, federal, and state unemployment. The total of all those are an additional payroll tax expense over and above the payroll expenses that they're incurring for the employees. So then we want to, in the next item, journalize the payment of the payroll on March 16th. Up here we recorded the liability to pay the payroll to employees. When we pay it, we are actually just decreasing the liability that we recorded up here. So we decrease wages payable and we credit cash. The last item that we need to do is to journalize the deposit into the Federal Reserve Bank on March 31st of the employer's FICA and federal income taxes that were payable to the government. So when the employer recorded a liability for the FICA as well as the federal income taxes and their share of the FICA, what they do is they end up paying that directly into the Federal Reserve Bank. And so that will simply involve a debit to both those liabilities, the amount that they recorded for the employee plus what they recorded for the employer. Total liability that needs to be paid is $396.80. They also need to pay the employee's federal income taxes payable. The debiting both those liabilities decreases them, and they pay them by depositing the cash into the Federal Reserve, which means they are crediting their cash for the total amount that they are depositing. Well, hopefully you have a better understanding of how payroll liabilities are calculated. Reach out if you have any questions.